First of all, welcome all of you. And I think we are at a launch of a very important event, as was spoken of by the Secretary Mighty, as to what they see to be the potential of the entire thing, and also the CEO of GSTN, that for him it was an aha moment. So y'all have the privilege and the challenge of being the early adopters. So let me ask, we'll start from there. Tell me, what do you feel will be the models to which you will be able to apply this particular development?
Thank you, ma'am. I have the privilege of having been a part of two banks, one very new and one old. So when we're building it in ICICI Bank, the models that we thought about are very different. But now that I'm in IDFC first, I think the thinking is, in fact, if you think from a model perspective, we started stuff long, long ago. Most of it was either rule-driven or intuitive-driven. At that time, bureau did not exist. And somewhere down the line, bureaus came in and revolutionized the way lending was done, the modeling. I think we are in a typical seminal moment. The word has been used multiple times, and I think that's the right thing which defines it. The ability to convert a thin data file into a thick data file by using data which is already available, and by using ecosystem to bring all this together and run models. I think the models that we spoke about are very limited, whether it is wealth or financial management, lending. I think the potential is enormous. And if you can look at it, the way UPI is taken off, whether it be scorecards, whether it be rule engines, whether it be ability to do very small ticket transactions, escalate it upwards, I think the potential is huge. And that's what we are all banking on. Use tech and data to dramatically look at lending in a new way, liabilities in a new way.
Okay. So let me ask Rajnish, given the kind of changes that he just talked about the different models that you'll have to use, as the head of a very, very large bank with a very old legacy system, what are the challenges that you perceive in actually, plumbing the potential of this particular change?
Madam, is always in adoption of the new technology. But I can say that despite being a legacy bank, and you have been a contributor in that we are now considered to be the one of the most advanced bank as far as the technology adoption is concerned. And I'm carrying forward that work. And in terms of the usage, both as far as the SME business is concerned and personal financial management is concerned, both will become very easy. Already, PSB 59-minute loan, which is common lending platform for all the public sector banks, with the consent of the customer, of course, we are using their GSTN data, income tax return data, bank account statement, and in principle, approval is generated within 59 minutes. And after that, the banks take about a week or so to sanction a loan. So it is the power of the data. And the approach is, as Mr. Sani was mentioning, is a flow-based lending now, or Mr. Prakash Rao was mentioning. And that is where the value lies. So I see value both in terms of the SME lending. It can be definitely scaled up, as well as in personal financial management, as well as lot of pre-approvals. Today, we are now moving towards pre-approved loans. So it could be pre-approved personal loans, which have become very popular with all the banks in 3 months. We ourselves have built up almost 500,000 now users who have taken loan on YONO in a few seconds. And the loan book is already 900 million. So I think that our ability to scale up is always there. So it's all about how do the users adopt. I don't see as much challenge now in the bank, because already the digital layers, framework, APIs, all that ecosystem is already developed in the State Bank. And as was being shown on YONO, and I am happy that One Money used YONO to show. So in a limited way, for the State Bank of India, all our companies like insurance, credit card, mutual fund, this aggregation we have already done. But the consent management, we are using the data of other banks. So that is a felt need, because now everyone has, I think, maybe an account with more than one bank, or more than one insurance company, or more than one mutual fund. So it is all about like how do we scale up and how do we integrate and at what speed the data can flow. But it is a very, very good beginning, because consent management is the biggest issue, that how do you do the consent management? And that is where the power of account aggregator or account aggregation lies.
Okay. So, Mr. Bagchi, you know, like Rajnish just talked about that, you know, lending is going more and more towards flow lending. And you know that in India, for a very long time, we have been going by what were called the Chaudhary norms, where you looked at ratios rather than this. So within the bank that you had, and there is a very, that's also a very large bank, are you seeing far more acceptance for this new model of lending? And do you think going forward it will make for better and safer books in the bank?
Ma'am, I think we should first, the economy is certainly moving to a services economy, and in the services economy, collateral anyway are lesser. So from that perspective, I think first we have to shift the paradigm in any case. I think only 17% of the economy is really of the old kind. Actually, almost 60% is of the new kind. I think first we have to move towards that, because if there is no collateral, there is this. Second one, which is very important, that we have to understand using these infrastructure, that at the end of it, you know, there is a cost of acquisition, there is an OPEX to asset, and there is a credit cost. You know, things like this actually attack everything. It reduces cost of acquisition, it reduces OPEX to asset, and it reduces potentially credit cost. I would feel that one of the reasons why, you know, that whole transmission doesn't happen is because the whole infrastructure is such that it is all prone to all kinds of costs. Cost of acquisition, so search cost is very high, OPEX to assets are very high, credit costs are very high. As they start to come in, I think the transmission will also happen. Third thing is that with this, I think new models are also evolving. See, there are no unviable businesses, there are unviable costs. So 10 rupees, if it costs me 8 rupees, it is viable, and if it costs me 12 rupees, it is unviable. I think the whole focus has to be to using public infrastructure, innovate to bring down cost. So that then either it passes on to the customer, and in a competitive scenario, bulk of the value will get passed on to the customer, which is very good, because it creates, you know, economies of scale, and part of it will be left to the shareholders. And I think that is the way it will go. I think this is the way to go. Actually, that solvency-based, project finance-based requires a very specific skill, because we are projecting cash flows in 3 years, 5 years hence. That's a very, very different kind of business. So I would say that by and large, I think it will evolve into cash flow-based lending, and it will evolve into project finance. I don't think there will be anyone in between. And in fact, if you look at all the data of credit cost, it is really in between which hurts the most, which is essentially half cash flow-based, half solvency-based, okay, and solvency is poor, okay, and there are no cash flows.
Right. Okay. So that's one way of looking at it. Mr. Chaudhary, we've heard a lot about the upsides of this particular development. Do you perceive any downsides? And the other thing is, you know, as Rajnish said, you know, it's a question of how you will bring about acceptance. You know, what are the steps that, you know, banks would be willing to ensure that the acceptance becomes better, people start experimenting with this and using it. How do you envisage that journey for your bank?
So a couple of things. One is that obviously the usefulness of this whole model is around that people are willing to share data. So, you know, GS10 hopefully will come on board, but all the banks also need to come on board. Delighted that Mr. Rajnish Kumar and SBI is leading the way. But it's important that all the big banks actually come on this. Otherwise, I mean, what data you share? If the limited people are willing to share the data, or there are only limited set of people who want to just use the data and not share the data, the network effect does not come through. So I think that's one thing. Call it the push the usage, or call it the fact that there's enough data should be available which can be used. Second, my view is that I think a lot of people who don't have the data will get very, very excited. I hope that they use it for the right reasons, rather than it just becoming a way of paying some money and getting data, because end of the day, the aggregators also have to make money. So they will give this data to whoever, I mean, obviously based on certain conditions, whoever wants it, but it should not be misused. Third is, finally, the power is with the customer, and customer has to give consent. And how do we give the customer the assurance that by giving more data, they actually get what Anup is saying, a lower cost or a lower price. And if that does not get demonstrated very quickly, I think the power of this whole ecosystem will go away. So ultimately, the customer will ask the question, what is in it for me? So either I get the loan which I was not getting, or I'm getting it at a lower price, or getting it at terms and conditions not available. So I think the onus is on all of us to ensure that that value proposition comes through and it is talked about, and actually you can demonstrate that, yes, you're getting something extra. I think that will ensure that these things come through.
Okay, and one more very quick round. Mr. Madhivanan, how do you see the expenses for the banks or for the people who, have established systems for ensuring that the data that they get from this, that the amount of spends that they will have to make in order to evolve their own systems to ensure that this sort of is seamlessly integrated into the very many other processes that they have? How would you rate the costs? I mean, do you think it will be, the cost will be on the higher side? It's reasonable? How do you see that?
In fact, ma'am, it would be very, very accretive. The fact that most of the banks have already bought into the UPI ecosystem or the Aadhaar ecosystem, which Nandan called the entire API story, and therefore then moving into the microservices, it's a big enabler. So typically banks need to play around with their own modular architecture to ensure that they're opening it up. So I don't think from a tech perspective it's going to be huge. You don't need to build anything from scratch. You're actually building on top of what is already a public infrastructure that you've created. On the second hand, this is one model where you're actually getting the ecosystem players. So let's say a OneMoney or each of these guys are also playing the role of a bridge in a very beautiful way. So a big chunk of the activity is happening there. Now coming to the providers, a credit bureau, when we built it, we did it by data sharing. What is it that they can bring in? Is there a uniform technology, standard protocols? If these can happen, I think the cost is not going to be negligible. And like Anup said, it actually will help us bring down the cost of acquisition and monitoring.
So it would be good if we could find out ways of doing it so that,
uniform standard manner.
Uniform standard manner. Okay. And Rajnish, one thing that strikes me is that, we need to drive adoption. Now, what would be your way of driving adoption?
So one is, Madam, first is it starts within the organization. And organization, what I have found, and this is my experience with driving the YONO, so one is that it has to be driven from the top. At least in the State Bank, I don't know about Axis, whether you need to drive from the top or it happens automatically. So once people know that there is a value and there is convenience, so why would a staff, for example, who is the first user and who will sell it to the customer? So unless the staff who is at the, say, front desk, so how does he get convinced? So he has to see value for himself that it is making his life easy. And
so say somebody who's giving you data through an aggregator, would you be willing to make his loan, say, 5 basis points cheaper or something?
Absolutely.
Because things because as he says, the costs are getting driven down?
And it will definitely bring down the costs. And as the costs come down, any technology, any innovation, the question which we ask is that there could be 3 purposes, I would say. One is it leading to better experience for the consumer?
Right.
Second is it leading to the enhanced revenue for the bank, if I'm spending money? And third is it leading to the cost efficiency? And when we have seen that, like the digital payments, we started with a significant amount of fee, and today for all digital transactions we don't charge anything. And why don't we charge anything? Because now the model is not fee based, it is about the customer relationship, because it's not that how much I earn about from fee on RTGS, NEFT or IMPS. It is about the overall view of the customer relationship, that what value I am deriving for it. So bank, as a bank, and at least for State Bank, I can say for sure that if there is a cost efficiency, definitely the benefit will be shared with the end consumer.
Okay. And Mr. Bagchi, you saw the demo. Did you think that the entire process could be made even more user-friendly? And why I'm coming at this is that, when we launched the wallet from the bank side, we found that in respect of our wallet, for every transaction you had to put in the PIN. Whereas one of the competitor wallets, which was from the NBFC side, they had to put one PIN, and after that it was open for as many transactions. And the customers preferred that. Here, you know, I found a number of places where you have to keep putting pins and things like that. So what is your view? That should this be made even more, you know, simpler and more user-friendly? Because at the end of it, it's very important stuff because of which you're asking for pins and all. So what would your recommendation be for the AA community? They're present here. Would you feel that this is okay, or you would want something even simpler?
Well, ma'am, first is that you know, our life is not defined by what financial services is doing, because people are doing and using other services which are much more better in customer experience. Now this whole issue, the example that you gave was actually a regulatory arbitrage.
Yes.
So that we'll discuss separately. That what are the regulatory arbitrage?
We couldn't get past it.
So if they are regulatory arbitrage, then it's a separate thing. We have to really look at risk very closely and who underwrites the risk. But even after underwriting, there is an issue of trust on the customer side. So even if I say that I'll pick up all the cost if something goes wrong, but the trust, because that's a systemic thing, so that also has to be sort of in a way weighed. I would say that, you know, once we start getting production grade on this, I think customers will push for much better user experience, and also APIs, etc. These are all test servers, ma'am, so it is also slower. Nobody waits for 10 seconds for a page to come up these days. You know, after 2 seconds, people just move on to something else. I think it will all develop. Okay. And because there are a couple of aggregators, there are, you know, a lot of people on both sides of the table.
Not couple, there are 7 now.
So seven on this end. Then users and providers are many. I think there will be competition which will bring it up. So I'm not really sort of at this point of time.
And last but not least, Mr. Chaudhary, people have been sort of predicting whether it will outdo UPI in volume or whether it won't. So what is your view? How do you see this progressing? Do you think it's something that will become bigger than UPI?
No, I think UPI is used for payments. The number of transactions there are just way too high for this to cross that. But I think this can revolutionize the way customers access the financial service providers, because you can actually just use one financial service provider.
No, what I'm meaning is not that the exact number of transactions, but how ubiquitous is it?
Oh, this can be as pervasive as UPI if people are convinced that this can add value to their, you know, how do they, you know, deal with financial services broadly defined. I think this can be as pervasive as UPI. There's a question of, you know, when it takes off, and when technology takes off, there is no end to it. So hopefully we'll get there, yeah.
Okay. So thank you so much. So with that, on a happy note that we are going to be as ubiquitous as UPI today, I think I can say thanks to all of you all for being here. Thank you.
Thank you. Thank you, Rajnish.